We're joined by Han Tan. He's the Chief Market Analyst at Nemo Money and joins us from Dubai. Welcome. So, do you see optimism over Ukraine talks as sustainable, or are markets too quick to price in progress?
Well, I actually put a different slant to it in that over the past few years, we have seen markets have been really quick to move past geopolitical risks. Sure, there is that knee-jerk risk-off move. There's this shoot first, ask questions later. But once there's this narrative that sinks in that the worst-case scenario is being avoided, then markets just really quickly move on. And now, to be clear, a swift end to this Russia-Ukraine war could alleviate some of the downside risks to the European economies. But I think overall markets are more focused on other things, namely the central bank policies and trade-related developments right now.
Okay, Han, but with that in mind, European markets just opened slightly higher after Zelensky mentioned security guarantees could be agreed within 10 days. So what's driving this reaction?
Yeah, so we could pin it down to some risk-on moves, but for proper context, if you look at today's moves in particular, they're quite marginal, right? If you look at major European stock indices, they have been holding to this sideways pattern for the most part since May. So in order for risk assets in Europe to really climb that next leg up higher, again, that catalyst has to come from some other front. Again, I'm looking at either the Fed or what's happening on the global economy.
And we saw the dollar firm up ahead of Jackson Hole. What might Powell's speech mean for currencies and risk assets?
Yeah, it's a big one, right, for markets because historically the Fed has used Jackson Hole to signal major policy shifts, right? So if Powell lends credence to the idea for a Fed rate cut in September, with markets already pricing in about an 84% chance of that happening, if that gets bumped up to 100, then that should weaken the dollar while boosting risk assets higher and vice versa. But, personally, I think, we would still see that rather cagey Chair Powell that we've seen in recent Fed meetings because there is still conflicting signals coming out of the U.S. economic data.
Han Tan, Chief Market Analyst at Nemo Money, joining us there from Dubai. Thank you.
Thanks for having me.